investor who's stayed invested in this market, what are the 2 or 3 mantras, to beat this market volatility, say, in the next 3 to 6 months?
I think in longer-term investors, Sonia, should not worry so much about volatility because, when people are looking at ideas or stocks from at least a 3 to 5 year perspective, they'll have to be vigilant of volatile phases because they could top up on their holdings at more attractive prices. But otherwise, 10-20% volatility is par for the course for longer-term investors. I think longer-term investors who want to deploy more money should play the waiting game still, but be cognizant of the fact that a lot of very interesting names have actually cooled down on the valuation radar quite significantly. I'll give you an example. One of the standout stocks of the last 1 year has been Britannia. Now, Britannia was a great story, but Britannia went very quickly to 40+ PE multiple. Now Britannia has corrected 25% with the rest of the market and very quickly in a few weeks adjusted its valuation from 40p to 30p. Now 30 is not cheap, but it's cheaper than 40p. So you keep watching very patiently and say, can I get Britannia if the market mayhem continues at closer to 25-26p? At 25-26p, I would like to buy Britannia because it's still a fabulous story, excellent management. You don't get that kind of FMCG companies at 25p. You haven't for the longest time. But suddenly the market's giving an opportunity for a very high quality, stable earnings name at maybe 30-35% off its peak valuation. And for longer term investors, that is exactly the kind of opportunity they would be looking at or should be looking at in this market mayhem. The same thing is happening with a bunch of pharmaceutical names. That whole sector expectedly has lost about 25-30% of its valuation very quickly. Now, some of them have done that because of issues like US FDA, but the collateral damage in the pharmaceutical space has been immense. A lot of names which do not have overt US FDA issues have also fallen 35-40% in line with the big names like Sun and Dr. Reddy's. And you want to be looking at, I'll give you an example, Glenmark. It's come down to 14 PE from maybe 25, 22 or 23 PE. Now, I'm not saying go out and buy Glenmark immediately because they have some issues with the ruble, but it's an example or illustration of a sector which has corrected a lot, which you can't write off, but you're getting better or more attractive valuations. I mean, I can go on with examples, but you need to be careful here, Sonia, because some of these stocks are contracting valuations for very good reason, like names like Jubilant FoodWorks, Bata, Page Industries. These have been blue chip investor favorites, but they're correcting because there could be structural changes going on in their business model because of the discontinuities of e-commerce. So you do not want to buy everything because stocks have come off 25%. You want to let some of them pass, but some of them, I think, are long-term hold candidates which are giving you good entry opportunities.
Fair point. There are some very tall guys in that space. Well, I just